Ladies and gentlemen, good day and welcome to KRN Heat Exchanger and Refrigerator Limited Q3 FY25 Results Conference Call, hosted by Dolat Capital. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Kapil Yadav from Dolat Capital. Thank you, and over to you, sir.
Thank you, Sudhir. Thank you so much. On behalf of Dolat Capital, I welcome all the participants on this call and thank the management of KRN Heat Exchanger Limited for the opportunity to host this call. For today's call, I have with me the management side, Mr. Santosh Kumar Yadav, Chairman and Managing Director, Mr. Sonu Gupta, CFO. With this, I now hand over the conference to Mr. Santosh Yadav for the opening remarks. Then we'll have a question and answer session. Thank you, sir, and over to you.
Yeah, good afternoon to all. So thanks to connect for today's call. Our CFO will give the brief and then I will answer the question answer. Thank you.
Good evening, everyone. It's my pleasure to welcome you all to KRN Heat Exchanger and Refrigeration Limited Q3 and 9 months FY25 earnings conference call. I truly appreciate your time and interest in joining us today. The world around us is changing rapidly with rising demand for energy efficient cooling solutions, increased investment in data centers, and push towards electrification in key industries like railways and automotive. At KRN, we are not just adopting, we are driving this change. Our relentless focus on innovation, expansion, and customer-centric solutions is enabling us to build a strong and resilient business capable of delivering sustained growth. Expanding our position a transformational lead, one of the most exciting milestones in our journey is our transformational capacity expansion in Nimrana, Rajasthan. This rupees 300 crore plus investment under our subsidiary KRN HVAC Products Private Limited is progressing at full pace. With civil work nearly complete and machinery trials underway, we are on the track to begin sampling production in April 2025. This plant is more than just an expansion, this is a game changer with a 6-fold capacity increase. We are not only strengthening our core HVAC and refrigeration business, but also entering high growth sectors like railway, electrification, heavy earth movers, and industrial cooling. Once this facility will fully operational, we expect to generate peak revenue of 5x to 6x of current level. Our exports have been growing steadily, increasing from 9.57% to 14.68%, and we are actively expanding into Europe and North America. With the global shift towards China Plus One strategy and favorable trade policies, we see significant opportunity ahead. Our entry into the war and plate heat exchangers will further enhance our reach, both in domestic and export markets. We are closely tracking the government PLI scheme for white goods, where our subsidiary company application referred to the Committee of Experts. Management is hopeful for final shortlisting. This will provide a substantial boost to our earnings and accelerate our growth plan. Alongside this, we are driving margin expansion through advanced coating and manufacturing efficiencies to enhance durability and cost savings. Solar energy adoption at our upcoming plant to reduce power cost, export-driven growth which offer higher margin than domestic sales, government incentive under Rajasthan RIPS 2024 policy enhancing profitability. Now turning to our financial performance, I am pleased to share that our relentless focus on the execution and the growing demand for our products having translated into strong results. In Q3 FY 2025, we achieved a revenue of 116.36 crore, reflecting a 73.67% year-on-year increase. Our EBITDA grew to 15.81 crores, up 34.76% year-on-year, while net profit surged to the 13.73 crores, making a 74.44 year-on-year growth. For the 9 months FY 2025 period, our total income reached to 305.88 crores, growing 32.96% year-on-year, with net profit raising to 38.01 crores, an increase of 39.02 year-on-year. This result reaffirms our strong momentum and the effectiveness of our strategy and initiatives. At KRN, we are building for the future with a major expansion underway, a growing global footprint, and the relentless focus on innovation. We are confident in our ability to create long-term value for all stakeholders. I would like to express my sincere gratitude to our employees, customers, and investors for their continued trust and support. Thank you, and I look forward to an engaging discussion ahead. I request to open the floor for question and answer. Thank you, sir.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Reed Ranawat from Avendus Capital. Please go ahead.
Yes. First of all, congratulations for the numbers. So I have seen the trend like in the share of evaporator coils increasing and condenser coils share in the revenue decreasing. So any particular reason for that?
No, I think in earlier call also I said like that for us evaporator and condenser almost like same product for us. So we just add the product portfolio then by condenser or evaporator. So if same customer sometime ask the condenser and some evaporator or maybe vice versa. So that's why as a manufacturer for us is both same part.
So no particular reason for that?
Yes, no.
Okay. So another question, are we seeing increased adoption of bar and plate heat exchangers in data centers or in comparison with spin and tube? So that's why we are starting with in the new manufacturing facility.
No, this data center cooling, our existing product will be grow, but for bar and plate application is different. So first application in bar and plate is like electric loco and off-road vehicles, and then earth movers or like compressors for lift trucks. So these are application for bar and plate like as a oil cooler. But for data center, our existing product as a heat exchanger will grow.
Okay. Last question. So how much of the MOU which was received from the Rajasthan government will be reflected in the financials? Like, could you give a time frame?
No, we signed 1,000 crore MOU with government, and we will try to meet these 1,000 crore in next 5 years.
Okay, next 5. Okay.
Yes.
All right.
Thank you. The next question is from the line of Shubham from Dexter Capital Advisors Private Limited. Please go ahead.
Yeah, hi. Am I audible?
Yes, sir.
Yes.
Yeah, hi. Thanks for the opportunity and congratulations, Santoshji, for a great set of numbers. I had a couple of questions here. So the first question was, what was our volume growth this quarter and what is our current capacity utilization rate?
The total volume, in terms of console, maybe HVAC also includes our standalone KRN heat exchanger. What is the total numbers? Give me moments.
Sure.
116. So standalone is the reflecting like KRN heat exchanger and console reflecting including HVAC. So HVAC like phase 1 we already started. So that's why total numbers is 116 and
So volume growth is 116% is what you're saying?
Year on a year basis, total.
Okay. So sir, basically, and our capacity utilization levels this quarter?
KRN heat, actually, we almost on the peak, so there is no more further available capacity. But HVAC, like phase 1 we started, so there is some spare capacities available.
So basically what I was trying to ask was on our condenser and evaporator coils capacity, right? What I believe is it is the same as last year, right? The March ending FY24. Our capacity is similar for those, right? Because our subsidiary KRN HVAC, it is to start commercial production from April 2025. Would that understanding be correct?
No, HVAC, KRN HVAC have two phases. So first phase already started last year with same product, and phase second will start from April.
Phase second. And for phase 1, what were the products that were started for phase 1 in HVAC?
It's the same product, KRN, like the heat exchanger only.
Same. And so what would be the total capacity for evaporator and condenser coils, including both our standalone and HVAC?
So as of now, total capacity, like we achieved is maybe 85 to 90%, including HVAC. So you can say if I club totally, so only 5 or 6% we can increase till April. And April we will going to add new facility for both heat exchanger and as well as other product.
So sir, the question was basically on our March 2024 ending financials, right? So was there a significant capacity increase between this 8 months, so that due to which we were able to increase our revenue by 70%? Like, what was the main reason behind a 70% increase in revenues this quarter for year on year?
So there is two reasons. One, we added HVAC as a fresh identity. Secondly, we added some machine also in KRN heat exchanger. So you can say we did like some line balancing. So that's why we able to increase some turnover.
Understood. Also, sir, just a last question. I'll again join back the queue. So basically for the bar and plate heat exchanger as well as the oil cooling units, right? Are we doing any testing with our customers? Basically, I believe loco manufacturers would be our key clientele here. Are we doing testing for those products with them?
Yes. So testing is there almost 6 to 8 months. So we already got the tender like from BLW for 10 piece for like as a development order.
Okay.
Now we waiting for their visit to us, and after their visit we will supply 2 proto as a trial. So they will trial almost 6 to 7 months, and then we will enter in the main phase for bar and plate. So it means our bar and plate facility is almost ready for production. So we already made some proto as well. Now we are waiting on government side. They will visit and we will offer 2 proto, and they will test like 6 months, and then we will enter in main phase. And meanwhile, we will do like this compressor and then JCB, forklift trucks and off-road vehicles. So we will align with these clients and we will try to achieve some production from that.
Sure, understood. Thank you. That would be from my end. Thank you, sir.
Thank you. The next question is from the line of Amit Rajput from Ritz Capital. Please go ahead.
Hi, am I audible?
Yes.
Yes,
Sir.
sir.
Thanks for the opportunity, sir. So, sir, all of the questions were being answered, and I have just 2 questions left. So, first is your revenue guidance. As of we have completed 3 quarters in this year. So, what will be the range of revenue will be closing FY25?
So this running quarter almost same, or maybe we'll try to increase 5 to 10% on last quarter.
Okay.
Because our capacity almost full.
Okay. So my last question regarding the debt side, you have said that you have signed MOU with the Rajasthan government regarding 1,000 crore, and I guess you have raised around 42 crore rupees from IPO. So rest of the funding will be from you will be doing through debt or?
So as of now, first we will start this existing facility like with this 300 plus investment, and then we will review after 6 months from in like our incurral profits or maybe from working capital from bank. So that we will decide after 3 or 4 months.
Okay. So when will be your capacity will be operational? If you could give me the date or month.
As I said, this bar and plate is almost ready, but other facilities, some like construction work is pending and machine is under trial, some machine is coming. So fully we will try April and as a proto sample manufacturing. And then we will need 4 to 5 months to set all things like people training, quality system, customer visit. So mass production we will start in second half of next year.
Okay. So that's all from my side, sir. Thank you. Thanks for answering all my questions.
Thank you. The next question is from the line of Mansi Neni, who is an individual investor. Please go ahead. Ms. Mansi, I would request you to unmute your line and speak, please.
Can you hear me?
Yes.
Yeah. Actually, most of my questions are answered. This one question is, government has announced a big boost for the nuclear energy in this budget. Is KRN has any plan to enter this as heat exchangers are used in the nuclear energy also?
Actually, we are manufacturing all type of heat exchanger. So including we are going to add heat exchanger with SS tube as well in new facility, SS tube. So we will have to study this nuclear requirement, what type of heat exchanger they need with material. So for sure, if it in our range, then for sure we will add this as well in our portfolio.
So it's possible. It's possible in future.
Yes. As of now, we don't have any specifications, so we in deep we cannot comment, but sure we can make it in our range.
Yeah. Okay. Thank you so much, sir. Thank you.
Thank you. The next question is from the line of Ruchita Karge from iWealth. Please go ahead.
Hello, sir. Very good evening. So my question was mainly on the gross margins for the quarter. So, we've seen quite a dip. So what was the reason for the same?
Actually, what we analysis, there is two reasons. First is our this employee cost is increased because now we have almost 850 people against last quarter it was 700. So because now we had 150 manpower for our new facility, so they are under training because we have to train them to before shift our new facility. So this is a slightly increase. And second, small portion is actually earlier China government on mainly this copper and aluminum, they are giving subsidy almost 13% to their manufacturer. So I think 2 months back, they will take back that facility. So then they increase the price, and compared to that, this Malaysian and Thailand vendor also increase. So this is the slightly impact on us on this last quarter. Actually, we passed to our customer in next quarter. So from 1st of this January, we already passed this impact to our customer, and slightly difference this USD to INR conversion also. So I club these three reasons, then it's slightly down.
So, sir, just to follow up on that, so, in the earlier call, we've mentioned that, we usually book the contracts on 1 quarter before 1 quarter prior to that. And we have an inventory for 2 months. So, even after that, I would face this kind of disruption on the margin side?
No, 1 month impact will be there. So if 2 months inventory we can keep, so 1 month, so that's why. But if you compare man employee cost, then raw material side this USD to INR and raw material is very, very thin, very thin. But reason is there.
Okay. And sir, other than that, do you get your order book? What kind of order book do you have currently?
Our order book, we have always rolling type. Secondly, your first question, I remember I said, but that is this China, that 13% duty, that impact we are not aware because it's the first time they did. So this actually not covered in our contract now. So they did first time, so we have to pass on when our price will renewal on 1st of January. This LME portion and USD to INR, of course, we covered in last quarter, but this China, like anti-dumping or maybe this incentive they take back, that's not covered. And your second question, order booking, actually, we have order booking continue with rolling actually, because we do regular production based on customer requirement, not project based actually.
Okay. And so, when we say that in the next 3 years, that we should reach a peak revenue in terms of the capex that we are doing. So what gives us this confidence, sir? Like, do we have any kind of soft commitments that are in place, or, we've done the testing of our products with these clients and we are just waiting for the manufacturing to start so that we can start supplying to them? So just wanted to understand a bit on this.
No, actually, what you said, so it's almost all regions. So some of customer we have like soft commitment, and some of customer we already they approved our sample. So just we are waiting for new facility to start in mass production, and also we will add some new customer as well. So in recent this month, in February, we are doing 2 exhibition, one in the USA and second in India, Bangalore Acrex, and third in March we are doing in Germany for ISH. So that we will add new customer, we will increase our demand from existing customer, and then some customer we are waiting for to just start. So if I club these all 3-4 regions, so then there is a requirement actually.
So just one more follow-up on that, sir. So these customers, how big are these customers would be for us, who we've already done testing for and, from whom we've already received soft commitments? How big are these people?
They are quite big. Even one customer is, you can say, they are buying heat exchanger compared to our existing top line, maybe 4 times they are buying from other country or maybe other supplier. So they are quite big. Even some of more than 100 crore and some of around 50 crore or 60 crore in a year requirement.
So how much of this do we expect to acquire from them? If their demand is so much, how much of it can we take? What is the pie that we can take?
Actually, basic story is like that. When we started our facilities we started one floor, then we had second, third, fourth. So it means this existing facility is the optimized facility. So when big customers who came to this facility, so they can just buy themselves, they cannot meet our big requirement. So that's why we are coming with big facility, almost 6 lakh. So when they visit this facility, so they can see by their, they can meet from our requirement in terms of building, machinery, layout and everything. So based on that, actually many commitment or many visits already happened. So we are working on that, and then it will for sure when they will start, we will meet their quality standard with delivery and quality, and then slowly they will increase the requirement.
Okay. Got it, sir. Got it. Understood. Thank you so much.
Thank you. The next question is from the line of Shiv Kumar Prajapati from Ambit Investments Advisors. Please go ahead.
Yeah, thank you, sir, for having my question. First of all, congratulations for such a great set of numbers. So my first question is on the revenue front. So I think we are operating at the optimum level since last 2 to 3 quarters. So this time we did around 111 crores. So what is there any change in product mix or something that made us to reach this level? Because hardly 90 to 95 crores of revenue was expected.
Can you repeat again question?
Yeah. So sir, actually we are operating at the optimum level since last 2 to 3 quarters. So is there any change in the product mix or a high value product being sold this quarter that made us to reach this 110 crores of revenue this quarter?
No, our old customer will remain same. Of course, their requirement is increased, so then also is added value in our system. And also we added some 1 or 2 customers from North America. So they give us some big order. So that's why we able to increase that. And also, honestly, unable to provide to all customers. So some of new customers just in queue.
Okay. And sir, my second question is on other income. I see the other income is too high in comparison to other quarters. Could you please throw some light on this?
Other income is there, I think two parameters there. One is our incentive from government, and second interest cost, because we receive money from IPOs and then we receive some FD amount interest.
Okay, sir. And my next question is on this North America and Europe. We are planning to expand in these regions. So do we have any competition or competitor operating over there that we may face any challenges?
No, actually, competitor one is from like Europe and one is from North America, but some of the like operating in Mexico maximally. So now we have like for us is one good news. Like USA put the duty 25% on Mexico as well. So for us, I think now we can easily compete to Mexico and Canada vendor as well if they want to supply in USA. So Chinese, actually, our company is not there with Chinese earlier also, and now not. So what we have to compete to European and North America manufacturers. So we can easily able to compete very easily. Even they can get almost 10% of their bottom line of saving if they receive our product.
Okay. And sir, post this regime change in USA, do we anticipate any challenges after Trump coming in over there?
No, for us, I think it's better that I said because earlier we have some threat some of manufacturers, they shifted their facility in Mexico especially, and then they are manufacturing in Mexico and supplying to USA because of Mexico also labor cost is quite low compared to USA. So for us, I think Trump from Thursday he put duty on Mexico and as well as Canada. So for us, I think it's better chance compared to Biden.
Great. And so my last question is on the Indian geography. So I think more than 40% of our revenue comes from Rajasthan state, which is obvious that we operate over there. So sir, any strategy to expand in other states? Because I believe the other states hardly contribute around 10% each. So what's the strategy to penetrate in Indian markets?
Yes, actually, we are thinking to open one facility for South India, but it's still in under planning. So fully in next 6 months we will conclude on same and then we will update.
Okay, great sir. Thank you so much. Best of luck.
Thank you.
Thank you.
The next question is from the line of Amit Rajput from Ritz Capital. Please go ahead. Mr. Amit, I would request you to unmute your line and speak, please. Due to no response from the current participant, we will move on to the next participant. The next question is from the line of Preet Gandhi from Numeric Research Lab. Please go ahead.
Hello, sir, and thank you for this opportunity. So I just wanted a few clarifications with respect to the new facility. So, sir, in April, that new facility will be operational, or will we be just laying the bricks for that? And what will be the current capex involved in that with respect to that new facility? And what does that new facility inculcate?
So this new facility, actually, there is total 4 shed, 1, 2, 3, 4. So 2 shed almost complete, 3 shed maybe will complete by this month, and 4th one will complete next month. So shed 1 and 2 already machine we installed, bar and plate, especially bar and plate. So we also made some proto and we received 1 proto order from government as well. Secondly, all shed we will complete in March and that's why we have said April and we will able to make proto on complete. And office block will be slightly delay, it will complete maybe July or June end. We have 4 week, maybe totally 5 club, then 4 weeks we have problem with this grab also because we are in NCR. Actually, this facility-wise, so we said the total our production volume will increase by 6x compared to existing facility, and mass production will start from second half of next year.
Second half. Okay, perfect. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Yashwanti from Cogent Invest. Please go ahead.
Thank you so much for the opportunity and congratulations for the great set of numbers. So just one query, why we have seen a dip in the EBITDA margin?
Ma'am, can you repeat again? Your voice is not so clear.
Okay. Am I audible now?
Yes, yes.
Yeah. I just wanted to understand what has gone wrong or why our EBITDA margin had shaded from around 17% to almost 13% plus for this quarter.
A percentage I have to calculate, but actually, if compared to like last quarter to this quarter, so there is only three things is what I said. Like one is our employee cost increase because we have hired 150 people for new facilities, so they are under like training. And secondly, some impact on for 1 month for raw material because earlier China giving subsidy to their vendor if they export, then they receive 13% of the total amount. So they almost 2 months back, they already take back that facility. So that's why they're able to increase their price and suddenly they increase other country price as well. So that slightly impact on us on raw material price.
Okay.
The rest is the same.
And when you expect it to all these issues to settle down, the labor costs are contributing, and when we can go back to our earlier margin of around 17 to 18%?
Raw material price, of course, we already passed to our customer from 1st of June, but this 1st of January. But this employee cost is still we will have some maybe next 4 to 5 month problem with HVAC because we have to hire people, we have to train them until we start mass production.
Okay. So can you just throw a light on the competitive landscape in the HVA and HVAC&R industry, and how does we differentiate ourselves, or what are our moat or the competitive advantage as compared to our competitors?
Can you repeat this question again? Your voice is
Yeah, basically I just wanted to understand how is the competitive landscape and what are our moats or our competitive advantage that differentiate us from others.
So now I got your question. Actually, if you see, as on today, our maybe gross block is around 70 crore of KRN heat exchanger actually. So it means last 6 years we invested only 70 crore and we achieved probably this year around 350 crore like that. So this new facility in first go we are investing more than 300 crore plus, and we are adding new product as well as existing product. So it means this new facility will be the latest facility with latest machinery, latest technology, including we are importing some machine from Europe, even from USA, even from Japan, even from China. So as of now, you can see as a professional heat exchanger manufacturer, maybe we will be the largest facility in India other than OEMs. Okay. So based on investment, of course, result will also come, and we will call to our all customer as well as our export customer. So based on facility, I think if I compare to my competitor and our distance will be quite long.
Okay. And now when these new capacities are coming up, which the investment which we are putting it in the facility?
The new facility like April, we will start sampling for all product, and then mass production will start from second half year of next year.
Second half of year. So in that case, what kind of a growth you project for FY26 on the top line and the bottom line basis?
That exactly number I cannot give you, but
ballpark number in terms of the percentage growth you can say.
Actually, 6 months we will have very less number, but for 6x1 capacity mass production. So if I add all product, then for sure growth will be there.
Okay. So in your opening remarks also you mentioned that once this new capacity is coming up and it is operational at a full capacity, you will see around 6 to 7 times turnover which you have reported, and which is your current turnover. So have you see what is the industry growth driver you are what is the industry demand driver you are seeing currently? And likewise, have you seen any demand or the product expectation from your existing clients or the new verticals region-wise you are expanding? You can see some demand growth for them. I mean, you are expanding the capacity, but then how it is been getting sufficed or meet by the demand?
Yeah, I got your question. So actually there is 3-4 parameters. So we are increasing our capacity, including other products as well. So it means existing products for other products. So we are adding like 4 to 5 new products as well. So total we are expanding 5 to 6x. Secondly, we will our existing customer growth is there. So 25 to 30% we are receiving growth from their side. Even especially data center growth is more than 30%. Secondly, we will add some domestic customer to whom we are not supplying now. Secondly, we will add export customer to whom we are not supplying now, or maybe we will supply just some samples only. So they are waiting for mass production. So it means if I conclude, from domestic existing customer, then domestic new customer, then export existing customer and export new customer. And then fifth one is new products. So if I club all things, then we will able to increase 5 to 6% next year.
Okay. Just now you say that you are not able to meet the export demand which is currently there, or you are not supplying to the export which is currently there. So is it the capacity was the constraint for us?
Yes, existing we don't have capacity actually. So for export actually, whatever we are supplying, so we are supplying since last 3-4 years. So they are growing, so we are also growing. But new customer we are unable to supply because of capacity constraint.
Okay. And how much is current export contribution to our revenue, and post this expansion, where do you see going forward?
Can you repeat this question again?
Yeah, what is the current contribution coming from the export? How much in the revenue, how much export accounts for?
It's now percentage around 20% of total top line. And next, we will shortly we will try to make more than 50%.
Okay, so domestic with the existing client and the new client, it will contribute around 50, and again export existing and the new region and the new client, it will be contributing to our 50 in the 5 to 6 times the revenue growth. Am I understanding it correct, sir?
Yes, correctly.
Yeah. And just quickly, last 2 questions. You might have mentioned, I might have missed out, our current order book and the executable period.
So order book we have not like that actually. We have rolling actually. So one of maybe customer, they are making their machine maybe 100 pieces in a month. So they give me the forecast maybe for 2 months and for PO for 1 month only. So each month is rolling. So we have to supply to what they are making. So based on our order book always there.
Okay. And what is our current working capital cycle, sir?
Can you repeat this again? Your voice actually very less.
Okay. What is our current working capital cycle?
Current working capital cycle.
90 days.
90 days. Okay. Okay.
Yes.
Okay. Okay. Yeah. Thank you so much, and wishing you the best for the coming quarter.
Thank you. The next question is from the line of Mithun from Kirin Advisors. Please go ahead.
Hi, sir. Just wanted to understand your current capacity and how is that going to change in the next 6 months or a year time once you put up this new capacity or some rights issue also you're subscribed to your subsidiary. You could just take us through that CapEx plan and how capacity will change.
No, adjusting our one capacity in KRN heat exchanger and second capacity in KRN HVAC phase 1. So these both capacity we are almost full, and phase second of KRN HVAC we will start proto from April and or May early. And then for our existing product, of course, we will pick capacity very quickly. For other product, we have to go through the customer approvals or proto testing and like that. So that's why we are claiming our mass production will start in second half year of the next year. So total capacity, if we compare to existing, we are targeting 5 to 6x of top line.
Sorry? 5 to?
5 to 6x.
Okay. Of the current capacity.
Yes.
That will be ready by when?
Trial will be ready by April end, but for mass production, second half year of next year.
And your existing products capacity is going by how much, and new products is how much?
So if new product, we added 5 new product and 1 existing. So if I total half and half maybe. So you can existing will be 3 time and 3 time will be other product.
So the other products is the first time you're making it.
Yes, but they are also heat exchanger actually, not different line. Only this line of business. So customer is almost same and the product is also heat exchanger.
You're saying 5 to 6x of the current capacity, meaning you can do 5 times the revenue of FY25 or?
So we will, we are assuming or we are planning to achieve in next 3 financial year, start from April.
Sorry? I don't understand it.
2025 result and the year result, we have assumed that we will multiply by 5 times in the coming 3 years time.
Okay. And these products that you're manufacturing, the end consumers would be which of these companies? Because you mentioned these orders are based on the requirement of the client. So if there is a demand shortage or something, would there be a problem that you would face?
No, it's a B2B business, na? So whatever part we develop for some of customers, so we are supplying 100% to them. But if they are asking some new development, then of course we are taking time. Secondly, we are unable to add new customer or new part number due to capacity constraint.
And how much would your top few clients contribute, or top 5 clients in terms of orders or revenues?
Top 3, I don't have any tips, but it total top 10 is contribute 80%.
Top 10 contributes 80%, but top 3 would be how much?
Top 3, I think, I'm not correct, maybe roughly it's around more than 50%.
Top 3, is it?
Yes.
Right. I'm just trying to understand.
Top one is our Daikin, so they contribute almost 25 to 30%, and then Schneider 15%, so that's entering 50% around.
Understood. I'm just trying to ask you, for example, if Daikin or one of your clients sees an issue in terms of demand, then what happens? Is my question. Because you're putting up so much of capacity.
So then, as of till now, we are adding 2 new customers each month. So this is our average actually. So as of now, it's not seems to us that their demand will reduce. However, if reduce, then we will add new customer as well. So we working on both verticals now.
Got it. So it's mainly the AC industry. There's no other industry that you are targeting.
It's HVAC and R, heating, ventilation, air conditioning, and refrigeration.
Okay.
So it include all commercial side like automobile, bus air conditioning, metro, train, then data center cooling, power plant coolings, then heat pump, then swimming pool heat pump, and then
got it.
The VRV, yes, all.
Understood. Thank you.
Thank you. The next question is from the line of Ajay Surya from Niveshaay. Please go ahead.
Congratulations and thank you for the opportunity.
Sorry to interrupt, Mr. Ajay. I would request you to please use your handset.
Am I audible?
Yes.
Yeah. So my question is, sir, on the margin. Sir, if I look at our past financials, even before financial year 2022, the gross margins were around 20%. But in last couple of years, the gross margins have suddenly moved up to 29-30%. So wanted to understand what has changed in the industry which has led to the increase in the gross margin. And also, sir, in the current quarter, we have seen a dip in gross margins. So, sir, going forward, like, how should we look at the gross margins?
So first, actually, when we started business, so we started with small OEMs or aftermarket clients only. So that time our margin is slightly very thin. So then we asked to big OEMs to visit us or give the opportunity to start with them. So then we have on board like big B2B customer or even export also we started from second year. So then we have orders from big clients or export side. So then now we are not working with the small OEMs or maybe can aftermarket. So then you can see that we are able to increase after 3 years, and then now we are on same level. And this particularly is slightly down because of this main reason is our manpower cost increase because of new facility. We added more than 150 people for new facility. So now we are giving the training to them to sitting before them. So that is the reason.
Sir, but also like wanted to understand because we are also expanding such rapidly and such hugely like 6x capacity expansion. So what is the capacity expansion that is happening across the industry? And what gives us the confidence to we will be able to maintain the margins going forward?
No, this capacity, I think I already replied confidence. Secondly, about margin, actually, new facility, of course, next 6 months we will have some hit from manpower cost. But after 6 months, we will have 3 to 4 regions to able to sustain the margin. So first, number one is we will increase our export side. So our margin is slightly good compared to domestic and export. Secondly, our electricity cost will be very less, because we are putting solar.
No, sir. My question is because in last call also we mentioned that roughly we have a market share of around 20-25%, and we are now expanding 3x in the existing products. And is there no capacity expansion done by other players, like any other competitor who is expanding? So just wanted to understand how is the capacity expansion happening across our peer group? How are they looking at the going forward demand? Are they not expanding, or just wanted to know more on that?
No, honestly, about peer we cannot comment if they are expanding or not. But for us, we can see the visibility in the market. We can see the demand, so that's why we are expanding. So here we cannot comment. Secondly, about industry, of course, everybody is growing. So you can see new HVAC hub in City City. So everybody put their facility there, like Daikin, Voltas, Havells, Blue Star, all. So industry growth is there, and like OEM, of course, they are expanding. But our competitor, they are not much aware, and we cannot comment on that. Secondly, confidence, I think that question I already answered, why we are expanding.
Got it. And sir, last question on, so we are now moving into bar and plate heat exchanger, which we will supply to locomotives. Sir, I got to understand it is a tendering process for which we'll have to bid and get the orders, right? So sir, wanted to understand because when we'll have to build L1 or be the L1. So how will the gross margins differ from our existing product and in bar plate?
So yes, you are right. There is the bidding process. So we got the 10 number for as a proto development under bidding only. And what we study compared to raw material and EBITDA or maybe gross margin. So there is if we compare to our existing product, so margin is better. Even L1, if we last 2 or 3 years, which we study, so margin is better compared to an existing if we compare to L1 prices.
Got it, sir. Got it. So all the best for future. And also wanted to ask, can we have a plant visit arrangement to know more about the company and the expansion plan?
Yes, that is, I'm requesting to all. So this is the best idea. Honestly, if you see our facility, so we are making world best facility. Even this will be the largest facility for our product in India as well as South Asia. So you can connect with our IR agency, Mr. Sunil. So and then you can plan. So we are near to Delhi Airport, around 2 hours from Delhi Airport. So for sure, we are most welcome to all. You can visit us.
Okay, sir. Thank you and all the very best for the future.
Thank you. The next question is from the line of Hardik Gandhi from HPMG Shares and Securities. Please go ahead.
Hello, sir. Am I audible?
Yes.
Yes, yes.
Thank you for taking my question. Nice to talk. Nice numbers for this quarter. So just wanted to ask a few questions. That first, there was a dip in the export numbers. We said that, there's a huge demand on the export side, but there was on a console basis, there was a dip in export numbers. So can you help with that?
Actually, as of now, we are exporting to our existing client only. So last, we added one customer from North America only. So now we are accepting order from there only. So it means we are able to start mass production to new clients. So there is maybe if you compare to whatever order we receive, we achieve the delivery for same. Secondly, December end there is some delay for 1 or 2 weeks because of this Christmas festival. So then we dispatched in the January month. So if you see in January month, our export will increase for sure.
Understood. Makes sense. And the second thing is, we received a PLI for roughly 140 crores, and along with that, we have an MOU with the Rajasthan government. So, if you can just help me understand the economics of it, how will it help us?
So this Rajasthan government, actually there is no impact on commercial side. So they just signed the MOU under 1,000 crore for next 5 years. We can invest in Rajasthan and we give the employment. This is the just. Secondly, there is another policy called RIPS, Rajasthan Investment Promotion Scheme. So this policy is there. So we can, it's 24 policy, year 24. So there is a provision we can receive 1.4 to 1.6% of the top line for next 10 years. So whatever we will do the top line, government give you the incentive or subsidy for 1.4 to 1.6% for 10 years. Secondly, about PLI. So PLI actually we applied and then they forwarded our application of the COE, this the committee of the experts. So they called us in this Monday only. So just brief about our product or our company. So fully they will announce the final result maybe 1 or 2 weeks. So if we will receive the PLI, then there is some calculation. So I don't have much idea on that. They will give 6 to 4% for next 3 years on the top line of the production or incremental on the last year. So this we will maybe more brief on in next call.
For how many years? So this one?
Actually, they started this PLI before 2 years, so that I'm not sure they will consider us from fresh or from as a expansion. So if they will consider as expansion, they will give us 3 years, and if they will start from 0, then it's 5 years. So that rule is not clear as of now. Once we will receive the approvals, then same application we will receive this thing also.
Understood. And for RIPS, that was 10 years, correct?
RIPS is 10 years. Actually, RIPS also there is two options. So we will choose option this for 10 years. So there is 1.4 to 1.6% of top line for 10 years. But if we receive as GST deposit and then we can claim, that is for 7 years. So we will choose this top line one.
Understood. And this will be added to the other income, or how will this be accounted for?
It will be other income. It will be another.
Understood. And the last question is on the gross margin front. I will not ask all the previous questions. I just wanted to know from you, what would be a good approximate blended gross margin or EBITDA, whatever is comfortable going forward we can assume on the products. I understand for the next 2 quarters we have pressure from the employees or because we are training them and other things because of the production ramp up. But I'm asking you after 9 months period or 10 or a year from now that, once all the things are normalized, what would be a
No,
good gross margin?
I got your point. So actually, as per my personal opinion, I think I replied region of the key why we can able to increase. So if I include all these 3-4 regions, so we will able to increase 1 to 2% on existing.
Okay, perfect. 1 to 2% on existing. Yeah. Thank you so much, sir. I hope to see you in the plant visit. All the best.
Thank you.
Thank you. The next question is from the line of Lakshya Agrawal from Growth Sphere Ventures LLP. Please go ahead.
Hello, sir. Thank you for taking my question. So I had just one question. Like you had earlier mentioned that the fluid and steam, which is a fin tube heat exchanger, it is something which is required in the data center. If you could help me with what percentage of revenue do we get from in this current year? Because FY24 you had mentioned that it was 7% of our revenue. And what is the anticipated revenue going forward in the next 2 to 3 years?
So actually, we didn't prepare that data, so unable to answer. But however, there's one thing I can tell you: this increasing is in good condition. So maybe if you give your maybe die, we can prepare and then we can forward to this data. But it is increasing for sure.
Okay, sure. I'll reach out to the IR for the same. And secondly, what could be the margin profile? Like, is it similar to what the existing products we have, or for this the margin profile is different?
Actually, it depends on customer and product type. So we have like cost sheet actually customer wise. So like if one customer we already freeze the cost sheet, now whatever product will come, then same cost sheet will follow. So if we will add new customer and if export, then of course we will slightly charge more compared to domestic. So it's depend on customer and of course product and then volume also. If they need one piece or multiple, so something like that actually.
Okay, understood. Currently, which are the customers to which we are supplying this product?
So we have almost 3 to 4 customers. So they are using our product in data center application.
Okay, if it won't be any problem, can you mention the names of these 3 to 5 customers?
I can mention only one, like Schneider Electric. So they mainly we are supplying to them for data center cooling. Yes.
Okay, and do we also have a product mix in terms of like how much of the total revenue do we have currently of the evaporator and condenser coils, or is it something which needs to be prepared?
That also need to prepare, but honestly, there is no meaning of condenser and evaporator because both product is for us is same. Our manufacturing is same, and only for like application customer wise is different. So if still you need, we will provide.
Okay. So thank you. All the best.
Thank you. The next question is from the line of Hitesh Bhandari from CJ Shah Family Office. Please go ahead.
Hi, sir. Thanks a lot for giving me the opportunity. One question is on the revenue side, like you suggested, we would be able to do 6x in 3 years. So wanted to understand the bridge for the 3 years. Once we get to 6x, what could we expect for 25 and 26 if you have some rough numbers that you can maybe guide us through?
Actually, numbers I think we unable to provide, but total we will try to
maybe
achieve.
On the capacity side, how much of the capacity we will be able to utilize? Of the total 6x capacity that we are thinking, how much each year would we progress on the utilization part?
So roughly I can give you an idea like that. We will start the proto from early next financial year, and then mass production will enter in mid of the year, and then full capacity will try to achieve next 3 years. So then same percentage you can calculate.
So basically, sort of linear growth in terms of utilization growth.
Yes, actually we will add new customers. So some customers will need approvals, and especially for new products, of course, we will have less effort to increase our growth in our existing product. But for new product, first we will start for small OEMs and then still aftermarket, and then we will enter with OEM.
Right. So like we mentioned that from mid of next year, we would be able to enter mass production. So
Yes.
now looking from there, like we do have some soft commitments and a few customers whose demand we are not able to fulfill right away. So how much of the demand would be available right away? Say once we get into mass production of the 6x capacity, how much, say 1x or 2x we would be able to supply right away, and rest we would need to grow?
But that percentage, I can maybe just, we have to make the document and then we can tell you. Secondly, like we already hired our domestic sales head, so now we are hiring some more people. So now we are going to customer for each product, and we are like some customer also they visited and some we may be visiting coming week or months. So based on that, we are doing meeting with all of customer and then we are showing our facility. So of course, soft commitment is there, but we cannot give the wrong commitment to market. So first we will have complete data, then we will let you know.
Understood. So, and sir, last question on the margin side. So just wanted to understand, like you mentioned, there's a cost sheet kind of a structure. So does it work on a cost plus margin model, or is there like sort of fixed pricing and then it changes? So if it is a cost plus margin model, then ideally we would want to have a fixed margin in our mind that this is something we want to make. So what is that percentage?
No, like we have a customer, like all type of customer, like some maybe running mass production, big customers, some have small quantity, some maybe special application. So based on customer or based on application, we like have customer base and then their cost sheet is fixed. So if we fix one cost sheet with one customer, then if he will add like new product, then of course same cost sheet will follow. Then other than like the domestic cost sheet we have different, and for export of course we have different. So based on that, we like already confirmed our margin will slightly increase compared to our existing margin in coming years.
Right. So this cost sheet, this gets revised once there is a revision prices or how does that like?
Sorry to interrupt, Mr. Hitesh. Your voice was not clear. I would request you to please repeat your question.
So this cost sheet is raised, say, on a monthly basis, or once there are changes, then only we intimate the customers on the revision in price?
No, we have some of customer like 1 month average, but very less. But mainly 95% customer we do average change like quarterly basis. So it means we change our price with the existing customer 4 times in a year.
All right. Thank you so much.
Thank you.
That will be from.
Thank you. Ladies and gentlemen, we will take that as the last question. I would now like to hand the conference over to Mr. Kapil Yadav from Dolat Capital for closing comments.
Thank you, Patel. Santosh, you would like to make any closing remarks? Then we'll
no, I think from my side all okay. I'm again requesting to all to visit us actually, so you can see our facility, what we are building up, and then based on that, maybe your 90% of question, of course, by default will answer. Rest of you will answer during the visit. So if possible, connect with Kapilji or maybe Sunilji, and then make a plan in group, maybe 5 to 10 people, and visit to us.
Sure, sir.
Good for us.
Thanks a lot, sir. Thank you very much. And all the participants, thank you very much. If any questions will be unanswered, do let us know. We'll provide offline sessions with the management. And thank you, Santoshji, and thank you, CFO, sir, for taking out time for this call. Thanks a lot. Thank you, everyone.
Thank you.
Thank you. On behalf of Dolat Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.